Hello and welcome to today's quick video, which is called "Is the SP 500 correcting in breadth?" I aim to help you today, especially with real assets. Don't forget that the daily analyses are the basis, so make sure that you are subscribed on my site for free and reading the daily articles, which are quite fast to go through because I focus only on the essence. Twitter and Telegram serve the purpose of two-way conversations and quick, reliable notifications whenever I tweet anything substantial. So let's move into stocks and the big picture. Today I will take it a bit differently. I will pose key questions that I had of course answered for paying subscribers of both stock trading signals and the all-comprehensive, all-inclusive trading signals. So these would be the questions to ask, and my clients have already a pretty good idea of how I expect today's and tomorrow's session to shape up. The second part of this slide covers the real sales, what is the market reaction and how to read it in macro terms. So, first question for you would be to check whether market breadth has peaked in your view. Is this a reversal or not really? That's a quite key question. Have a look at tech, industrials, materials and energy. Check also financials and possibly also healthcare. How does it read out to you? What's the meaning of these words those charts tell? How about those rotations? Are they sound? Is it more representative of market tops, or is there something to still kick in and squeeze the juice somewhat more? As regards today's retail sales, they came in not too hot, they did not disappoint, and stocks suffered because it could be said that they hinted at consumers getting under pressure, even though nominal sales did not reveal that in any stark kind of a form. So we have seen not bad enough figure, and that is being contrasted against Fed tightening in a way that does not yet disprove the notion that July is one and done, and so the markets maybe will they keep rallying, and if so, in which asset classes would the rally be concentrated in? And because of these rough views, whereby I seek to bring you the most actionable reviews, let me present what I had been talking for quite a few days already, and it lines up with the final bullet point of receding fear of recession, meaning not enough demand destruction and yet still kind of reasonably sound earnings and consumer savings. Let's move to gold and silver. Does it look like a bullish flag to you? To me, it kind of does. And precious metals are in a serious upswing mode. Note that for now they haven't reached any most serious level, such as the early June highs or even 1980s. Silver is though quite resolute, and that's in spite of relatively tempered consumer inflation expectations. So that sounds that sends quite a message. My key point of the second bullet point is that you do not need to see further US dollar weakness to get precious metals rallying. The volatility metrics, the Bollinger Bands and so on have been congesting for quite a few days. Sharp downside had been a sharp spike in selling pressure, to be precise, because it didn't last long, had been quite resolutely rejected in the last couple of days repeatedly, and that paves the way for a little bit of an upside squeeze. So even if the dollar remains kind of stable against the euro, even if it rises against the yen, I don't see it as putting a serious break on precious metals and taking gold back to 1940s. Not really. This is still right now getting in the grips of momentum players. So that's why I'm not looking for a sharp reversal in spite of the opening trepidations we see both in gold and in silver. But look at platinum, it's doing quite well. Talking crude oil, you remember my support levels of yesterday, 73.50 to 74 area. They did hold and were not really jeopardized seriously, and the next move in prices favors consolidation above the 74 level and upswing towards the latter part of this week. I'm not looking for that to strike way too soon. Not today when precious metals are stealing the attention and copper has quite a way of retracing the prior sharp downside. Crude oil would be kind of on the sidelines for today, but still above 74, no great move ahead. So this is how I see it. I hope that you are familiar with my daily analysis and that you follow me on Twitter and keep talking, commenting, and join my free Telegram to be informed of everything 100% reliably. Also, this is kind of a delayed presentation of what the premium subscribers have been in the picture about already for quite some time. So whenever you are watching, consider getting this information on a really timely basis. You know already my trading story, beware of all impersonators and various shaky impersonators, formats or accounts that are not genuine followers. Obligatory disclaimer, and let's move to today's trading because there is quite a lot of work to cover when it comes to intraday signals for stocks.